Afternoon, everybody. Uneducated Economist here. So in this video, we are going to be talking about the future liquidity crisis that might be coming to the bond market. This is going to be a pretty interesting video to kind of think about and discuss, because there's not a whole lot of people discussing the bond buybacks that are going to take place here in 2024. Now, there was an announcement made a couple of months ago, right at the exact same time that the debt ceiling debacle debate and everything was taking place, and everybody saw the Treasury, the United States Treasury was losing money, was like running out of cash. Everybody was worried that the debt obligations weren't going to get paid by the Treasury, like, Social Security checks or military or whatever. All these people were really super worried about it. The dice, I know, guys, you want the dice. I got to put the mirror back up. The glue failed on me, so I got to put it back up there. But anyway, so everybody was worried about the debt ceiling, and that if we failed to raise the debt ceiling, the Treasury was going to run out of cash and wouldn't be able to pay their bills. Well, I don't know how many people were really concerned about the debt ceiling, but I mean, I had very little doubt in my mind that they were going to raise the debt ceiling or just remove it altogether, like, they have in the past. But I knew that they were going to raise the debt ceiling and that the Treasury would go back into issuing out bonds. Now, something very interesting that took place during that time, like, take a look at the links that I leave down in the description. Financial Times, Bloomberg, Wall Street Journal, three of them, right? All three of the major players all came out and made a statement, made an article, talked about the Treasury doing a bond buyback, and it's been crickets ever since. Like, they made the announcement, they said it, and during a time in which that nobody was thinking about the Treasury loading up on cash, but actually running out of cash. And here it is, they're making this statement that in early 2024, they're going to be buying back bonds. This is the Treasury buying back their own bonds. Now, if you go and you read about the reasoning behind it, they want to make sure that the bond market stays liquid. Now, this is something that, like, a lot of people, like, if you're not familiar with bonds or markets or anything, and you hear somebody say liquid, like, how liquid is that market? Really, that means how easily you're going to be able to buy and sell that particular item, whether it's gold or stock or bond or whatever it is. How liquid is how easily you can sell that particular item, or how quickly you can turn it to cash. And now, typically, bonds are considered like the safe and liquid asset across the globe, right? If you got a Treasury bond, you got something that you can instantly turn to cash. In fact, a lot of times people will hold Treasuries instead of cash and use them as if they're a cash, because they're just that close to cash that you could sell them that easily. But if this particular market starts to have issues with liquidity, meaning that they don't have either the buyers or sellers at a particular time in the market, making it illiquid, right? So basically, when you go to sell it, right, that's the major problem. When you go to sell a particular item and you cannot find a buyer for it, then that means that it is illiquid, right? That it doesn't, it's not nearly as easy to sell as something that would be more liquid. Okay, so here you got the bonds, and if they have an issue, right, the U.S. Treasuries. Now, the rest of the bonds, they can have issues, whatever happens to them, defaults and bankruptcies and stuff like that. But the United States cannot have an issue with a bond, right? Especially like a defaulting bond or a bond that doesn't find a buyer, right? If that bond doesn't have a buyer to it, then that's not a liquid market. And that's what the Treasury is truly worried about. I think the Fed is worried about that too. So now, here, if you go and you read the articles and you listen to the statements coming from the Treasury, come 2024, they already have the concern, right? They're knowing that in 2024, that the quantitative tightening that is coming from the Federal Reserve, that is reeling in the, or lowering the cash balance, or what am I trying to say here? The quantitative tightening, unwinding the Fed's balance sheet. When that happens, when the Fed unwinds the balance sheet, their balance sheet, what they are doing is they are allowing Treasuries, right, the bonds, the Treasuries that the bonds that the Treasury sells, they're allowing those things to roll off the balance sheet. Meaning that when that cash comes back to the Federal Reserve, it doesn't get rolled over into new Treasuries. That literally is pulling cash out of the system. A lot of people don't think that's happening, but that is happening. In fact, there's some great Wall Street articles out right now talking about the quantitative tightening taking place. So now we know the Federal Reserve is pulling cash back out of the system, okay, through the quantitative tightening program, the shrinking of the balance sheet. Come 2024, there must be some economists out there who understand the timing on this, because come 2024, the Treasury is knowing that they are going to be in a position in which that they are going to have to buy back some of these bonds to make sure that those portions of the market stay liquid, right? To make sure that there is definitely a buyer for them. And so the Treasury is going to step up right at that time when a buyer comes into, or a seller comes into the market to try and unload some Treasuries, and they can't find a buyer for it, and the price of it starts to fall and the yields start to rise. It's going to be the Treasury who steps in and buys those bonds back, which is something they have only done very few times throughout history. And here they are talking about it right during a time in which nobody would be thinking about the Treasury loading up on cash, getting ready to buy back bonds. They were more concerned about the Treasury not having enough cash and what it is that they are going to do about loading up on cash, because what that meant is that the Treasury was going to have to be selling a lot of bonds or bills or whatever. Bonds, notes, bills are all loans coming from, debt instruments that are coming out of the Treasury. A bond is long term, a bill is shorter term, a note is very short term. So that's really where I feel like if you go and you look at the Treasury general account right now, you're going to find that the cash balance of that, although is a lot less than it was during the pandemic and during that time, if you go back over the last 10 years, you're going to find that right now the Treasury general account is sitting in a higher position as far as the cash holdings than it has been for the last 10 years, except for, again, for the little spikes. Well, they're not little, they're major spikes during the pandemic and the handing out of stimulus checks and all that other stuff. So this is really where I think that there's going to be a liquidity crisis coming at the beginning of 2024. I mean, we know if the bonds are having issues, right, with finding a buyer and the Treasury has to step up, can you imagine what the rest of the financial market's going to look like at the time? There's going to be a demand for dollars. There's going to be a liquidity crunch taking place. And that's really what I see happening when you see these kind of statements coming out from the Treasury in these articles that are talked about from the big, Wall Street Journal, Bloomberg, Financial Times. All these people talked about it, and then it was crickets. Nobody's talking about it again. So the people in the know, they're most likely getting prepared for this situation while everybody else is oblivious to it. All right. What are you guys talking about? All right. Good evening from Lakeland, Florida. Hey, it's great to see you, Kevin. All right, Dice. Yeah, love your channel. Keep it up, brother. Will do. Thank you very much, Richard. I appreciate it, man. It's those statements, man. It's those awesome comments of keep going, doing what you do, brother. If you find a YouTuber out there that you really enjoy who's getting new to the game, just trying to figure out to get a start on YouTube channel, send them comments like that. That's what will drive them, is to get those kind of comments. Thank you. Yo, what's up, UE? Loving the Beamer? All right. The debt ceiling is for money already spent. Cranamir? Okay. So we should buy the dip. To be honest, if you know that there's going to be a liquidity crisis coming into the future when it comes to the bond market, then you know that there's going to be liquidity issues coming other places, right? I mean, it's not just going to be in the bond market. I mean, it could be. I guess it could be isolated there, but I don't think so. I think that liquidity issue is going to be throughout a lot of the markets, and the Treasury is getting ready to deal with at least their little section of it, which wouldn't be a little section, just their portion of it. All right. It's all a gamble. Place your bets. Have you seen the new Fed Now for banking? I like it because I can pay my transaction actions between banks simpler, no checks or cash withdrawals and postal mail. Yeah, we actually did a video talking about the Fed Now probably 2 years ago. I kind of looked at it as one of those preliminary tools that are going to be used to move into a central bank digital currency. Although if you go and you read up on like Fed Now, they absolutely deny anything about being part of the central bank digital currency, but I question that. All right, know your companies. Do you believe in their products? What do you mean, do you believe in their products? Do I have faith in any of that stuff? The only thing that I have any kind of real faith in is what I can see and hold right in front of me. Everything else is a delusion, right? It's like, possibility. I don't know. Do you even trust their products? No. XRP. Everybody talks about XRP, and I read a lot of the Fed's documents. And I'm not trying to deny XRP being involved, with all the interbank transfer, international transfers, all that other stuff. I'm not trying to deny that at all, but I have yet to see anything coming from the Federal Reserve outside of other people making the suggestion for XRP, right, to the Fed, or the Fed mentioning it as part of a bigger group of cryptos. But never once have I seen anywhere in any Fed document saying anything about how they plan on using XRP or how XRP is going to be used. I can't find that anywhere. I'm not saying it doesn't exist or anything, but I've had people email me all kinds of links to stuff that isn't exactly the Federal Reserve making that statement, right? It's more of other people who are sending suggestions to the Fed, or the Fed mentioning it in another group of, in a group of cryptocurrencies. So I can't promote XRP to that idea until I can get that document. Other people talk about it all the time, and I'm not trying to say that it's not happening. I just haven't seen it from the Fed yet. All right. So UE, some folks like Josh Scanlon from Heritage Wealth Planning think bonds are only going to go up. Thoughts? That the yields are going to fall and the bonds are going to rise from here? Let me think about that for a second. No, I don't. I think bond prices are going to fall and the yields are going to continue to rise. And I think the Federal Reserve is going to keep interest rates elevated for a significant amount of time. That's the way I felt since before they even started to raise interest rates, that they kept interest rates extra low, extra long for an extended period of time for the purpose of causing more inflation than what people would have anticipated, because they wanted inflation to run extra hot, extra long for an extended period of time to make up for the fact that they didn't have inflation at the 2% target for the last 10 years. So now they're going for an average 2% over time, and that's going to keep the interest rates elevated at the Fed level for a significant amount of time, even after inflation falls, right? Because we're having inflation now. We got the super hot inflation now coming down. We got the disinflationary scenario happening. We're eventually going to go into, we've met our target. The Fed should not be keeping interest rates high, but they are going to keep them high until they can get that average inflation rate over time. During that time, people are not prepared to deal with that. They are going to think that the Fed is going to drop rates right then. They are not. They're going to keep winding in that balance sheet. They're going to keep tightening up the currency, and it's going to cause even more pain to the people during a time in which that they are just not understanding why it is that they are doing this, because the inflation will be down, but the interest rates will be elevated. And again, it's because of the average inflation rate over time. So if that's part of, and don't get me wrong, I think that, hold on guys, I think that that Josh from Heritage Wealth Planning, I think excellent YouTube channel. I mean, I haven't followed him recently, but when I was following him a few years back, I was very impressed with everything that he had to say. We all see this thing a little differently, right? I mean, everybody picks up information and tries, and tells their own story. I mean, I tell my story of what I've seen coming out of the economy, and it sounds very different from what a lot of other people say out there. But then again, I was looking at lumber, supply chain, and a lot of other stuff, and people were all pointing at the Federal Reserve and saying, look at all the money printing. So there was very different views taking place at the time. Now, for me personally, I think prior to 2019 that the Federal Reserve was looking desperately for inflation. Anywhere that they could find it, they needed it bad, right? The major problem that they were facing was an inflation expectation that was running persistently too low. And this is something that John Williams was saying in his speech from 2018 that was titled Monetary Policy for a Low Neutral Interest Rate World. I mean, he details it out inside of that we are going to have to move into an average inflation rate over time to deal with the fact that we can't keep shooting for this average or this inflation target, because the interest rates that they have is persistently too low, right? Man, that's a lot of stuff. what ended up happening is that the Federal Reserve would typically want to drop their interest rates 5%, right? That's how they would stimulate the economy. But they had interest rates too low. I mean, since the early 80s, they've done nothing but drop interest rates to try and stimulate the economy. Now they've run into the lower bound of zero. What do you do, right? So now the Federal Reserve is thinking, okay, so we need to drop interest rate, like, here we going into the next recession, right? Because they knew it, 2018-19, there's going to be another recession. There's one every 7 to 12 years. There's very little doubt there was never going to be one again, right? There's going to be one. And it had already run its course for the longest time without a recession, right? So it was due, it was happening. And all of us who were studying the economy at the time were just screaming our heads off, here comes the recession, get ready for it. And then all of a sudden, boom, pandemic kicks in, stimulus checks for all, right? Let's get out the stimmy. And it covered up. I mean, it completely covered up the recession. They called it the pandemic-induced recession, COVID recession. It wasn't. It was a recession that was happening anyway, definitely going to happen. But now they got the unusual and exigent circumstances of the COVID pandemic, and now the Treasury and the Fed can produce all these like unusual and exigent circumstance tools. Right? They had 13 lending facilities that they used to backstop the entire financial market, and that was a total game. Like, they knew that was going to happen. Like, that whole thing, it was like almost detailed out ahead of time. They didn't come up straight out and say, hey, we're going to set up these special purpose vehicles and bail out all the corporations and cause unemployment to fall through the floor, and this is going to cause wages to go up, and it'll eventually lead into inflation. They didn't say it out like that, but if you go and read like the Fed documents, you can find where they were talking about how they were trying to figure out a way to get the lower wage earners wages to increase, right? They said it, right? And I'm like, how are you planning on doing that? Like, you're gonna go to the companies and say you need to raise your wages for to pay people? No. I mean, how do you get that people to do that? Oh, I see. You just take all the employees away, right? Now there's no employees, or there's way too many jobs. One way or the other, you're gonna have to start paying if you want to have any kind of employees, and the wages start going way up. And I'm thinking to myself, man, how is it that you were able to figure all this stuff out ahead of time? Like, you knew that there was going to be a problem with these wages, but now, not so much a problem with the wage growth. I mean, obviously those are at the bottom end of the line still don't think they get paid enough, and they don't. But the wages have gone up dramatically since the pandemic. All this stuff is planned out way ahead of time. Man, I'm really going for it, aren't I? I gotta slow down. All right. Just discovered you a couple of months ago and have been tuned in ever since. I'm glad I found your channel. Well, thank you very much, Financial Charles. Very, very happy to see you here, man. Appreciate your work, bro. Well, thank you very much, man. I thank you. Do you follow DXY and following like the dollar and where it's going and what it's doing? I don't really follow like, outside of like the basket of currencies that the dollar is tracked against, I really don't follow the dollar that close, right? I mean, I don't follow like every, currency trade between the different nations and stuff like that. I just basically look to see what the strength of the dollar is compared to the basket of world currencies on the dollar index, and that's what I look at. Owner Op here, thanks for the live show. It helps me put the miles in. All right on, man. Thank you. Thanks for tuning in. Do you try to take advantage of your different credit cards, or do you stay away from that stuff? No, I use my credit cards. I like the 5% cash back. There was times, I mean, I haven't done it recently, but there was a time in which that I used the 0%, financing for a year. Like, you don't have to pay any interest for a year. I took a little bit of advantage of that. I didn't do anything like really major, just kind of, just use the money for my own convenience of it. But I like the cash back, get 1% to 5% of your cash, purchases back in cash. So I take advantage of that, a little bit. Whatever I put on my credit cards, I pay off at the end of the month, except for $5. Usually I leave $5 balance on there so I don't completely pay my credit card off. I've got excellent credit now. I got a credit score like, I don't know, 820 or something. It's like ridiculous, considering that I had a credit score that was like under 600. I mean, to have a credit score up at over 800, it was a long time ago that I'd seen that. Okay. The being rich delusion. Okay. XRP won its core case, not a security. Hey, caught you live. Sweet, right on. Well, Tim, thank you so much for the $50, man. That is so rad of you. Let's see here. What happens when the U.S. labor cost increases so much where everything is expensive? Yeah, I mean, I guess that's would be the sticky inflation that a lot of people are, probably talking about. And I guess on the lower end, that would create some inflation. I mean, it would create the inflationary scenarios. It would be part of the input costs going into most businesses. I still wonder about the wages. There's so much money to be made nowadays. There's so many like side hustles and everything else. Like the average wage, I just don't think would cut it anymore. Like if you just have like an average job, I mean, I guess it depends on where you live, but I live in a kind of an affluent area that, well, it wasn't always this way. But like average jobs, it would be very, very, very difficult to try and make ends meet. And so I think about like wages going up and creating the inflation scenario. It's not so much the input costs going in, keeping the prices high. It's the consuming that takes place from the people. When you have mass consumption from all channels, that's really what drives the inflation up, or drives the prices up. I mean, you have to think about it. Inflation isn't prices. Inflation isn't prices. Prices is the symptom of inflation. Inflation is the expansion of money and credit. When prices adjust, that's what happens on account of the expansion of money and credit. And it's not just the expansion of money and credit. It's the expansion of money and credit, and then that money flowing through all channels. Right? It's not because like quantitative easing 1, 2, 3, and 4 failed to produce the inflation scenario that the Fed was looking for. Now it did cause the stock market, the housing market, bond market, it's caused these things to go up, but you borrow money to buy these things, right? And a lot of people don't realize that, but that's a lot of times what is occurring, and that's what's driving these asset prices. The borrowed money is going into it. But when you have a stimulus check like we had during the pandemic, where they literally just went out and said, here's a bunch of money, go spend it, to everybody, and they're all like sitting around looking at each other going, yeah, let's go for it. That entered money in at all channels at the exact same time during a supply chain breakdown. So supply and demand imbalances caused the prices to go up on that. It wasn't just the money printing, right? Because like the Federal Reserve expanded their balance sheet from 850 billion to 4.7 something like that $1 trillion during quantitative easing 1, 2, 3, and 4. Think about how many times that increased the balance sheet. 4 times, four or 5 times or something. And it didn't produce the inflation that they were looking at. It did a little bit, right? And you got some of it, but it didn't really do that inflation scenario that a lot of people would have anticipated happening coming from all that money printing. But this time around, it only doubled the balance sheet. Now, it didn't only, right? I mean, it was a lot, right? Trillions and trillions and trillions of dollars. But it doubled the balance sheet as opposed to quadrupling it, right? You would think that doubling the balance sheet would be less effective than quadrupling the balance sheet, right? Quadrupling it would be more, right? But yet this time around created all this mad amount of inflation, and quantitative easing 1, 2, 3, 4 didn't, right? What was the difference there, right? And that's the major difference, is that they cut out the supply chain and they handed everybody a bunch of checks to go spend at the exact same time. Thank you for the question, man. Thank you for the $50. That's very cool of you, man, to support the channel like that. All right. My gold just works. Well, I like gold too. I like gold and silver. I mean, I'm a big believer in that. I'm a big believer in holding the physical precious metal, not to have it in some third-party claim. I'm a big believer in it. Now, I think of it as more of an insurance policy than anything else. A lot of people want to go back to a gold standard. From what I've studied on the gold standard, from having a fixed currency, the last thing this nation, the United States, would ever want is to have a fixed currency, right? To have a gold standard or a Bitcoin standard or something like that. Because we don't manufacture, or the fact that we import as much as we do, right? Because what would end up happening is that we would import all this stuff and export all our gold, and we would fall into poverty once our gold was gone, right? So if you wanted to go back to a gold standard, there's a couple of things that need to happen. One of them is we need to become a manufacturer again, a manufacturing powerhouse again, right? Which is something that is a very far distance away. The other, and basically so that we don't have to buy foreign production. So, and that would be the other side of that, is that we would have to stop buying foreign production, which ultimately means that we have to lower our demand for luxury, right? Our luxurious lives. We can't have all these little conveniences that come in from overseas, right? Or from outside the country, because that's the reason why the money would leave. Right now it's no big deal because we export, we sell US debt. Like what, we don't produce anything other than more debt. So we can buy as much as we want from the rest of the world. We don't have to produce anything for it. We just have to issue out more treasuries, right? But if we actually had to come up with a physical item like gold or silver or Bitcoin, or, well, Bitcoin, not a physical item, but it would be a limited item. If we had to come up with that kind of stuff, we would export it all out of our country, and then we would have nothing left here, and we would all be in the poorhouse because of it. Except for the rich elitist who invest, in outside of the country into places that are going to continue to be profitable, and then they'll be fine, and everybody else will be like wondering what they're going to do to eat. I guess that's the bugs, right? That's when they'll say you eat the bugs. That's when it'll happen, when we go back to a gold standard. It's sad, right? It's sad to think that, but that's the case, right? So it's incredibly important for you as an individual to load up on gold and silver and Bitcoin if you believe in that. But to go back to a gold standard, I would want to move to a more industrialized nation, or more industrious nation, I guess I should say. Somebody who's going to be exporting more than they import, because then the standard of living would be better there, right? People would be able to afford houses and cars and stuff. All right. We are burying the Fed. Go for it, man. Let's get rid of the Fed. I'm down. What are you going to replace it with, though? All right. They will put China market. They will, but China market is dead at disco. So Mexico will grow and expand like no other time in their history. Yeah, and it really seems to be taking place, too. Like, I knew a lot of manufacturing was coming back to Mexico just because I figured it was closer to the the consumer, the United States. But it's more than just that. They are actually becoming a bigger trade. Like, I was reading an article that Mexico is now the #1 trade partner with the United States, which, I mean, I knew they were a major trade partner, but I didn't realize, like, I thought China was the biggest trade partner, but apparently it's Mexico is the biggest trade partner with the United States. And I think that's both back and forth, like, import and exports, which is apparently is going to continue to grow, as far as their manufacturing base and their imports going into the United States. If they can, let's see. All right. Inflation running at 0.2, which is what it was before the pandemic. Is inflation gone? Yeah. I mean, is inflation gone? I mean, again, inflation is the expansion of money and credit, right? So right now there's a destruction of money and credit taking place. Give it some time, we'll eventually find that in prices. So inflation has already been gone for a while. I mean, it's been deflation for quite some time when you think about the Federal Reserve and the monetary tightening, the monetary or the quantitative tightening cycle that they're going through. That's deflation. Prices will eventually show or reflect that, right? And then people will be like, okay, inflation's here, but it's already been here for a while. All right, I'm waiting for them to get to 10%. The great pivot will come. Yeah, I agree. I think the great pivot will come, no doubt about it. But it's not going to come as quickly as everybody else is anticipating it coming. Yeah. All right. I hope the rate stays high for a while, finally getting a decent return on savings. Yeah, and this is something else that a lot of times people are wondering. It's just like, what is going on here? When you have low interest rates, you have a low return on capital investment. In fact, when you have such a low return on your cash savings or just in your investments, your capital investments, that it doesn't even beat inflation, that's a negative return on capital investment. That's a deflationary scenario. Low interest rates are a deflationary scenario when it comes to the economy. It's one of the reasons why quantitative easing 1, 2, 3, and 4 failed so much, right? It's because this return on capital investment, it's really hard to wrap your head around this. But I've used the analogy of, or just the idea, the story is if you had earned or inherited $1 million back in the early 80s, you could have bought 10-year treasuries, taken a return of like $150,000 a year, anywhere from 100 to 150,000 a year. That's a hell of a nice income for $1 million investment with the U.S. government every year, right? $150,000. Even today, that wouldn't be that bad. I mean, it's not great, but it's not that bad. And so, you know, now you invest $1 million with the government, you might get what, a $40,000 return if you're lucky. It's more like 38 today or something. So that return on capital investment back in the early 80s was a lot of money you could dump back into the economy, right? I mean, $150,000 a year, you can go buy houses and cars and do all kinds of stuff with it. Well, nowadays, even at 4% on a 10-year treasury, the return on capital investment is really not that much. It beats inflation a little bit. It pretty much almost breaks even with it. So you're at like pretty much zero still. I mean, maybe a little bit of a gain, but not much, right? Now, if that interest rate was much higher than that, then you would have a lot of money you could start spending into the economy again. But this is really where I think a lot of people are starting to see where the low interest rate was a deflationary scenario. Now the higher interest rates are at least a break-even kind of thing, maybe not so much inflationary when it comes to the return that capital investment will put back into the economy. I wouldn't necessarily go to say like that's like stimulating the economy, but I think that's one of the reasons why we're starting to see the markets doing as well as they are doing right now, is because finally people are able to get a decent return on their savings, which is something that they had never had before. You know, the whole idea that it was supposed to drop like the demand for consuming out there, but that's not really taking place. You know, I mean, we see the consumer is still alive and well here in the United States because that's all we are. We don't have anything else going for us. We're just a consumer. All right. We have interest rates at 20. Wow. What's your position? I'm not sure. Oh, I get it now. They're going to drop the average. Yep, that's what. And it's not even like really dropping the average. I think they're looking for the average inflation rate over time. And since they had the last 10 years, it was running under 2%. And here you only had a couple of years running at extra hot, extra, you know, extra long, or whatever it is they want to call it. How long back did they go to come up with this average inflation rate? They don't tell us. Like, we don't even know like what the average inflation rate metric is. Is it 10 years? Is it 5 years? Did it start like 2 years ago? Did it start 10 years ago? Nobody knows what this average inflation rate. It becomes completely arbitrary to the Federal Reserve. I mean, they talk about it a little bit, but they don't really talk about how it is that they figure it out. And then they don't give us like, here's the daily average inflation rate, like right here. You know, I don't see any of that information out there. So one day the Federal Reserve is going to come out and say, hey, we met our target. We're going to adjust interest rates. And everybody's going to go like, oh, finally. You know. All right. The great pivot will go to crypto when the dollar failure is collateralized behind Bitcoin. I can believe that like if the dollar fails, I could see Bitcoin and gold going through the, you know, becoming very valuable. Hey, we got 207 of you up in here. Go hit that like button. If you hit the like button, the YouTube algorithm will pick up the video, spread it around for more people to join in, and it's always more fun when we get more comments up in here. And, you know, I never ask for subscriptions. I would love it if everybody goes and subscribes to the channel. I would like to see this channel get to like 500,000 subscribers, right? I think that would just be fun as could be. I never asked for subscribers either. Once I got to 100,000, I thought, man, I can't believe it. I got to 100,000 without ever really asking for any subscriptions. This must be legit, right? That you got here. But now I really want to get to a 500,000. So go subscribe to the channel. Get everybody. Let's see. If I have 100,000 subscribers, everybody goes and gets like 5 friends to subscribe to the channel too. Then I can have 500,000 subscribers. Wouldn't that be cool? All right. Of course, there will be in September. Bullard is resigning August 15th. Really? I didn't know that. He doesn't want one last hurrah? That's probably it. Man, I didn't know Bullard was retiring. It's too bad. I've gotten to like know the guy, you know? All right, Lehman almost also crashed in September. Wow, inflation expectation. Wow, we want prices to go up. That a fantastic imagination. Bear Stearns in March like FTX. Create a moat. Recession happens because of interest. Systemic defaults are built in. Join a community. Stimmy. Always the chaos to use as scapegoats for greedy thieves. Community is paramount, James. Support your locals. James knows what's up. Can only prepare over it for so long. Oh, it can only paper over it for so long. Where am I? There we go. There's no points. There we go. Lots of price cuts on ZELLE up in your neck of the woods, Simon. You worried? No. No, not at all. My house has probably, from the peak of the ZELLE estimate, has probably had 15, I don't know, a lot come out of it, 15%, maybe even more. In fact, it was probably a good $80,000 from the peak that has come off of the ZELLE estimate. And where it sits today, it is still about $60,000 more than what I had paid for it, and about $120,000 more than what I owe on it. I mean, we would have to see the market drop another 25% from here just to put me at a break even on my house. I am so far from worried. I don't even think about it. Like, it's such a little concern of mine, you know. The building, here's something going on. Y'all know that I work at a retail hardware store. I sell lumber for a living. Now, I have seen a lot of lumber moving out, but it's summertime, so you would expect that, right? A lot of summer projects happening. But something that I was not expecting is the amount of vinyl windows that I am selling right now. Like, I normally, like right now, deck packages, right? People building decks, fences, outdoor stuff, outdoor projects, right? That's the big ticket, or the big projects that I'm selling out right now is lots of that kind of stuff. What I would typically do. And I've sold a lot of decks, but it's the window packages that I'm moving out right now, which is really blowing me away. I mean, it's like a lot of them that I've been selling. And something interesting is the rep came in, he was just like, I'm sorry guys, pushing the lead times out again. You know, we were getting windows in about 3 weeks, which, you know, before I could order a vinyl window and get it in 10 days. But that moved out to about 60 days during the pandemic and the shortages. Then it moved dramatically back up. Like the lead time shortened up to, like, I thought they were going to go back to normal, like 2 weeks would be normal. It got to about 3 weeks. And then now, boom, all of a sudden it's back out over 30 days. And every time I check, it's getting pushed out a little bit further, a little bit further. So I asked, the rep when he came in, I'm like, what's up, man? How come these windows are getting pushed back? He was like, busy, man. And I'm like, really? How many? So I started asking him, like, how many units you selling at, whatever. And he was like, more windows are going out now. And I said, okay, so before, a couple of years ago, it was major residential stuff going on, like lots of houses. He said, yeah, multifamily. He said multifamily, multifamily places, fourplexes, fiveplexes, apartments, stuff like that, are just like all the craze right now, and there is a huge demand going for vinyl windows on that. So I was trying to put the scenario in, like, what is it that is exactly happening here? Because as much as it's slowed down as far as the traffic, like coming into the store, the demand for these windows is really picking up, which is really surprising to me. I mean, I wasn't like anticipating that kind of thing happening. It would only lead me to believe that obviously there's, construction taking place on it, but it leads me to believe that there was a lot of holding off on either, because a lot of this is new construction, so you can't really postpone that, but a lot of holding off on remodeling of houses, I come from a very rural, I live in a very old area, so there's a lot of houses around here that are in constant disrepair or needing to be remodeled and stuff. So I kind of blamed it on that a little bit, saying like, well, maybe these people are finally coming into the summertime and they can tear, holes into their, in their walls and replace windows. But from hearing what the Repo is having to say, it leads me to believe that there is a building boom, or not necessarily a boom picking up, but definitely an uptick in new construction that must be happening to increase the demand for these vinyl windows. And anyway, that's just me babbling about that. All right. They put in minimum wages or add some funny regulations like Obamacare. If I had the money, I'd donate. Hey, man, just being here and hitting that like button, I really appreciate it, man. It's the encouragement that got me going on this channel to begin with. And, when I come out here to do this, I'm coming out here so we can share the information and, try and help to figure these things out so we can make the best decisions for ourselves. And if I get a donation from it, that's just that just makes it that much better for me. But I just appreciate you all being here. Thanks, we always like to get a different perspective and your thoughts are sound. Hey, I appreciate it, man. I could come up with sometimes I come up with stuff that other people say, but we could all just be saying the exact same thing, just giving our opinion about the exact same thing, or we could try and come up with things that are just completely different from what a lot of other people are saying out there, or even the story that we tell, right? For me, this whole economy and everything that we are facing right now, a lot of people want to take on the belief that the Fed failed. Like the Fed lost control, like the Fed has no idea what's going on or something like that. And here's the problem with this. If you take on a thought, right? If you take on a thought and then you add some emotion to it, right? The world's coming to an end. Or I just won the lottery. You got those, all of a sudden you got this feeling, this emotion that goes along with your thought. Like you're either going to get hurt or you're scared or you're super happy or something, right? This thought ends up kind of solidifying in your head, and then it turns into somewhat of a belief, right? But it's not necessarily a belief until you start finding evidence of that out there, right? Once you start getting the evidence of this particular thought that gave you this emotion that you have this belief on, and you start getting evidence of it, the more evidence you get, eventually it turns into a conviction, right? So now you're convinced that this is the way that it is, right? Simply coming from a thought. It wasn't even anything else other than just a thought, right? But yet there was some evidence and some emotion that went into it, and now it's turned into a belief. So people get really, really, really scared with the inflation. They were scared already from the pandemic. Now they're scared of losing everything they got. And then they were given the thought that the Fed had lost control. And this mainstream media push to say, hey, the Fed lost control, they have no idea what they're doing, here's all the evidence of it, you're going to lose everything you have, and now next thing you know, you're panicked about inflation. Now you got an inflation expectation that is super elevated, right? And that's what they were looking for. They put it all out there for everybody. Now, the trick to a lot of this is, and I have to deal with it myself, everybody does, no matter what you do, is to look at that thought, but then don't take it on as an actual belief. Right? Just keep it as the thought, right? Because we talked about this in the past, the mark of an educated mind is to be able to entertain a thought without accepting it, right? So you take on this thought, right? Don't add any emotion. It's not going to kill me. No, the New World Order's not after me. No, I'm not going to be eating the bugs, right? Not worried about them taking everything away from me and telling me I'm going to own nothing and be happy. That's all fearful stuff that is adding into this thought of emotion is not real, right? And then if you have this belief and they start showing you evidence of it, then you will take it on as a belief and it will be convinced of it, right? So I don't do that, right? Just keep it as a thought. Just keep it as a possibility. Just kind of put it in the back of your head saying, yeah, the Fed may have lost control, but then again, they may not have, right? Because if we go and look for the evidence that they lost control, I guarantee you will find it. You will definitely find that information and you'll be convinced of that, right? And this is where the mainstream media has control over so much stuff, right? Is because all they have to do is just put out a little thought, then hit you with a bunch of emotions, and then just show you evidence of it, and then you're done, right? You're convinced of it. And not necessarily you, I'm just saying, like, people out there in general. This is kind of how it goes down. Thanks, you. We always like to get you. Oh, we already did that one. Thank you, man. I appreciate that. Pooping while standing. I love the name. Matt, man, thank you so much for being here. How long have you been dollar cost averaging in stocks and crypto? Have you ever used dividend reinvestment calculator? So really, I have not been doing that long, right? Because, a lot of you know my story. If you had known me 5 years ago, like when I first started the channel, I was completely broke, had no, $20,000 in debt, and, sober. I was finally sober when I started the channel, but I wasn't doing well, right? So I had to get out of debt, had to get, all these bills paid, had to do all this other stuff. And then I ended up having to buy the house and having to pay tax and do all this other stuff. So I've been like pretty much broke the entire time y'all known me, right? Like the entire time. Like I would get some money in and then I'd have to buy, I didn't have to, but I bought the house, right? And I got some more money and paid the taxes. There's more money and all, like, medical bills. All this crap comes up, right? So the little bit I did dollar cost average into, I did into stocks. I bought Altria. I bought Vanguard ETF, total stock market ETF. I bought the Vanguard Russell 1000 ETF. And I bought Coinbase, which is killing it right now. The Coinbase position is up 50%, right? Because it was very volatile. I bought it when it first, when the stock first hit the market, and then I bought a bunch of it when it hit its low a few months back. And right now it's up 50%. It's the best part of my stock portfolio is the Coinbase part, at least for percentage increase. So Bitcoin, $50 a week for a year, and then I've bought in like $50 a month for the last couple of months, so I haven't really been buying that much cryptocurrency. Silver position, I loaded up on that a while back, pretty much when it went over $22 or so. I think I made a couple purchases, but that was the, I stopped there, because I think there's going to be buying opportunity in the future on that. So that's pretty much the positions that I hold. Most of it's in cryptocurrencies. So that's the position I hold. I think credit unions are better. Yeah, I use a credit union myself. What's the point of getting a good credit score when they are penalizing good credit score? I don't know. I don't know. I've only used my credit score to buy the house. That's the only thing. Love your channel, dude. Thanks for putting the effort into your content for us. Well, thank you guys. Thank you for being here. Thanks for being part of it. I mean, I could put out videos all day, but if you weren't here, what good would it be, right? So thank you so much for, for taking the time to watch the videos and commenting. Did anyone here leave a bag of Coke in the White House? All right, mutual bond, maybe? Silver is up 7% in the last 5 days while the dollar is going down. Yeah, I mean, there's like, you're going to find there's going to be volatility taking place. I would not knock the dollar out just yet. I think that we are still, come 2024, right, when you got this issue with the liquidity in the bond market, not, with the lack of liquidity in the bond market and the Treasury having to step up, I'm really curious to see where the dollar strength is going to be at that time. I'm not sure about the S&P, man. How will someone fare making $40 per hour in your area? $40 an hour, you'd probably do okay. Like, I don't think you would do great. You could probably find an apartment and make your living and do all that other stuff at $40 an hour. But as far as, like, I don't think $40 an hour here would be so fantastic of a wage that, you'd be able to do all the wonderful things in life, like buying a house and doing the vacations and retirement and all that other stuff. I mean, I guess it depends. I mean, everybody's different, It doesn't really matter how much money you make. It's all about how much you can save. And so I look at $40 an hour at, if I was to earn that, just to earn $40 an hour, I don't think it would be enough, Although you could probably make it, All right. Simon's greater than Milton Friedman. I don't know about that. But I appreciate it. All right. Seek free educators. All right. Make sure and hit the like button. Yes, please do. We got 231 of you, 115 likes. I thank you so much for hitting that like button. I read an article back in 2018 that a McDonald's manager could afford to buy a new house. Not so sure if that is true today. Again, I think it's probably in the area you're at. Like, again, like my house, it's gone up so, like, there was a moment there throughout, right after I bought it, and I'm watching the Zillow estimate of this house go up. It would literally go up more than I could earn, more than my job, my wife's job, and YouTube together. It was going up more than those three things combined, right? And I was just like, this is ridiculous. This cannot possibly continue on. And then it went on and on, right? And I'm looking at the houses around here going, this is ridiculous. This cannot possibly do this, right? And then we had a huge chunk come out of it. But it's still not even remote. It's not even close to where I bought the house at yet. Like, I mean, it's still, $60,000 ahead above that. And I know that ain't right. I mean, it shouldn't be like that, yeah? All right, the difference is we have too much money to fund the Ukraine wars. Greetings from the Humongous. Hey, great to see you here, Lord Humongous. Thanks for being here, man. The difference between Q3 and Q2 and Q1 was the rate of money printing over a given year. The COVID area spending was 50% faster than the previous decade. I don't know if that's necessarily an excuse. I'll think about that one, but I don't know if I necessarily buy into that one. All right, not true. Life was much better when we had real silver coins in our pocket. Really? That was like 1964. So I guess if you're 58 years old or older, then you probably remember that. Like, I don't know anybody who even remembers like silver coins in their pocket. Like, I don't know anybody. Like, there's a few people I probably work with who remember them, but like nobody remembers having silver, using silver. And so, how would you know if it was better? Right? It was better back when we were a manufacturing state, right? It was better because when we had silver and gold in our currency, we were exporting a hell of a lot more than we were importing. And with that, we were able to pretty much get the world to send us all their precious metals. And by the time we got to the 70s, right, when they realized that they had printed up way too much money and the rest of the world was asking for their metal back, we said no. Yeah, we're not. In fact, you can go ahead and keep using that dollar. We're not going to back the dollar with gold. We're going to back the dollar with debt, and you're going to enjoy that, right? I mean, that's what they said. And the world was like, nah, screw you. We're out of here, right? And they started to abandon the dollar. And that's one of the reasons why we had such an issue back in the late 70s, right? Because the world actually did not like the dollar. They were like, you know what, screw you guys. We're out of here. And we've talked about this in the past, right? It was so bad that the United States actually issued out treasuries that were due in German marks and Swiss francs. They weren't even due in dollars. They were due in a foreign currency, much like where you see, nations around the world who issue out debt in dollars. The United States was issuing out debt in a foreign currency, in Swiss francs and German marks. It was the only way they could get the interest rate that they were, a decent interest rate, or get anybody to even buy the bonds, was the promise to pay in another currency. And so it failed. Like, the monetary system was failing, right? And it was due to the fact that we had, didn't have enough exports to keep the money flowing in, right? France and everybody else was like, hey, we want that gold. And we were going to fall into poverty. And they were like, no, not going to happen. All right. Bring back manufacturing. Hey, it's a great idea. I don't know how that's going to happen, right? How do you bring back manufacturing? How do you bring back manufacturing when some foreign entity out there can produce it cheaper, easier, right? You can start putting a bunch of rules and regulations, start getting government involved to say, hey, you guys, you can't import that cheap stuff, and if you do, you're gonna have to pay a price for it. So you Americans, I'm sorry, you don't get the cheap, better products out there because we're not really capitalists, right? I mean, we're gonna have to like do these controls and tariffs and all kinds of manipulation to prevent that from coming in, so that we can have a manufacturing base that doesn't really exist here, but we can force it to happen. That's not free market, right? I mean, there's plenty of people who probably want to live that way, but it's very communistic, right? I mean, you think about it, if you have to do that sort of controls, then you're not in a free market, right? Free market is hey, I'm going to produce as much as I possibly can for the cheapest way I can to get the best product to the customer and to get the most of it to the customer so I can make the most money I possibly can. That's capital. That's the American way. But you can't have that when you have a manufacturing base that's outside of the United States. How do you get the manufacturers back here? Either you have to build a product that is so damn better than anybody else can possibly do it, that other nations or other people would be willing to buy it off of you, or you have to have a people who are not into buying the luxuries of foreign production, which everybody is into buying TVs. Right? Everybody wants, new furniture. Everybody wants new clothing. Everybody wants this stuff. And there isn't going to be anybody out there who says, well, I made a whole bunch of money and I'm not going to do anything with it except for save it and reinvest it, but I'm not going to spend it on any kind of luxury items. Like, that's the kind of thing you need to do in order to bring manufacturing back to the United States. I mean, it'll come back some, but it's not going to do well. All right? I mean, it does well in emerging economies with, a lower standard of living that the people are willing to work hard for. Those industrious people, those are the ones who are going to be able to manufacture the most products for the cheapest price. But here in the United States, you have to pay the employees too much, right? It's just like, it's not worth it. But if we did, I mean, I think it would be a great deal to bring back manufacturing. It's just that I think that the standard of living amongst the people would have to really drop significantly in order to be competitive with the rest of the world. If we have equivalent trade, it would balance out. Yeah, but that's the thing. We don't have equivalent trade, right? That's the whole thing. We don't have equivalent trade. And so if you were to try and do equivalent trade, what does that mean? It means, hey, stop importing all this stuff. And if you don't import it, what are you're gonna get? Nothing. You have nothing, right? But if you want to buy American, you're gonna have to pay a lot for it, right? So again, it's all about diving into luxuries. That's the problem with it is that the moment that you earn anything, I mean, if you work hard, right, and you saved up your money and you did that for a long time, the last thing that you're gonna ever want to do is to say, I'm not going to enjoy all this hard work. Like, nobody's going to say that, right? I mean, nobody's going to say, I'm not going to enjoy this hard work. What I'm going to do is I'm going to take this hard work that I've done and I'm going to go and save it or invest it someplace else, and I'm not going to enjoy whatever it is that investment pays me. I'm going to take that and reinvest it back into it. And I'm going to keep my standard of living in my life as cheap and as frugal as possible, no matter how much I earn, right? That's the mentality that it would take to bring manufacturing back. Otherwise, it has to fall apart. The whole thing has to collapse, and then we might be able to bring manufacturing back in. But there's no reversal to it. It doesn't work. I mean, I haven't found a decent example of it. Maybe it does work. Maybe we can do it, but I haven't found an example of it, and so therefore I can't really see how that could happen, Silver made America strong, not gold. Yeah, absolutely. I mean, I'm not trying to knock the benefits of having a gold standard. I mean, it would create stable prices that would be so beneficial to the people. I mean, finally, you could take money you earned when you were young, hold on to it, and actually retain the buying power for when you get old. That's what precious metals would do for us. However, we need to be a manufacturing state if we're going to do that. Otherwise, we'd export all our metal and we'd be broke. Housing shouldn't be an investment. You're right, it shouldn't be, but it is. right? I mean, there's a lot of things in the world that aren't fair and what should and shouldn't be. You're absolutely right. It shouldn't be. It is, right? That's the case. It is. It is an investment, and that's the way people are treating it, and that's the way the smart money treats it. Investment money. That's how they treat it, and it is unfortunate, but it's just the way it is. To acquire a skill that other people need. It should be a right. What should be a right? A housing? Sorry, James. No, I don't believe in that. See, rights are not something that anybody could possibly give you, right? Government can't take your rights from you. Did you know that? In fact, your rights were there before the government was ever even involved, right? That's the right. You have certain rights to travel. You have a certain right to breathe, to not be harassed or molested by for whatever reasons that you're out there, right? You have a right to be free from harm. You do not have a right to food. You do not have a right to health. You do not have a right to housing. You do have a right to power or phone or communication. None of that stuff do you have rights for. Those are every single one of those is an entitlement or a convenience that somebody else is offering, right? Don't believe it is a right. Like, housing is not no right. Healthcare is not a right. Food is not a right. None of those things are rights, right? You have a right to pursue those things. Mm-hmm. You have that, right? I mean, if you need food, you have a right to a job. Go get a job. There's plenty of jobs out there, right? I mean, you have a right to pursue a job, is what I should say. You don't have a right to a job. You have a right to pursue the job. You have a right to pursue the food, to healthcare, all that other stuff. Don't confuse your rights, man. See, if you put rights and you start putting it into somebody else's hands, saying, hey, I have a right to a house, you need to provide that for me, that means you don't have any rights for yourself, right? That means you don't retain anything for yourself. See, I have a right before the government even got involved. They say, come to me and tell me that I have a right to a house. I would tell them that ain't a right. You can't tell me that I have a right to a house, because it isn't for you to tell me that, right? They don't even understand rights. They can't tell me what my rights are. I tell them what my rights are, And there's no suspension of rights. There's no temporary suspension of rights. None of that shit exists. Right? You have rights no matter what, wherever you stand, 24/7. Right? And you got to know how to protect those things. And I buy precious metals standard, not just gold. And I don't mean to be kind of all, such a like feel arrogant about that sounding, but that's really the truth of it is most people don't understand what their rights are, and then they confuse it with other things, and then they expect government to do something about it, and it's just none of that is involved government. Fiscal conservatism, high taxes on working people, debt ceiling is the dollar fiat gold standard mechanism. Fiscal conservatism, high taxes on working people, debt ceiling is the dollar fiat gold standard mechanism. It's easy to talk. The problem is to implement. How to make jobs other people will need to use. Again, somehow, I don't look at the government as they're responsible for the economy. That's not their job, right? The economy is something that's going to operate no matter what. And it's our responsibility to understand what's happening within the economy to make the best, decisions and positions for ourselves, right? But for somebody, even that comment, it was just they need to figure out a way to have, high quality working jobs or something like that. No, that's not their responsibility, right? That's not what they do. It's not what they should do. I mean, they try to do something like that, but that's not what they should be, participating in. It's because it's not up to them. How's the S10? It's okay, it's got a lot of miles on it. It runs a little rough, but it still gets me around. The Great Crime of 1873, research it. What are your thoughts on commodity prices increasing as hyperinflation takes place? I don't think there's going to be a hyperinflation taking place. VDX is a big holding of mine after going smoked on oil, natural gas, since the government loves to manipulate that. Yeah, what are your thoughts on commodity prices increasing as hyperinflation takes place? I just don't think that hyperinflation is going to take place. I don't think it's going to take place so long as the dollar holds that world reserve currency status. And although a lot of people are going to say, well, what about the de-dollarization and the BRICS, right? They make up like 3% of all the world trade, right? Or the China, I guess I should say, right? Not the BRICS, China, right? Since they are the next one in line of all those nations to offer up anything that would even be remotely close to being used as a world reserve currency would be the yuan. It does such an insignificant amount of world trade compared to the dollar that it doesn't like it's barely like even a blip on the radar screen, right? I mean, the yuan is so far off from doing what the dollar can do that it doesn't even make sense that people would even bring up that argument, right? And the major problem is, just like we were talking earlier, is the bond market, right? The bond market, the U.S. Treasury bond market, is the safe and liquid asset, right? And that's very critical for people to understand because it pretty much replaced what gold would have done on a gold standard, on a world reserve, reserve basis. If gold was the world reserve currency and you replaced it, it would be replaced with the U.S. Treasuries, right? So now people have a safe and liquid asset. You think about it. If you're going to do trade, you're going to do oil trade. You're two nations. You're not even the United States. There's two other nations, and you want to do a trade of oil, and we're going to do gold, right? So now you have the gold. Like one nation has the oil, the other nation has the gold. The gold has storage fees, it has transportation fees, it has, whatever. It has all kinds of like attachments to it, right? And like I said, the stores, the transportation, the security, there's payment that needs to be made by simply holding on to gold. And there is payment that needs to be made by holding on to cash. But you can get paid by holding on to U.S. Treasuries, right? Because then you get at least a little bit of an interest off of it. So when we think about it from that sense, right, that the U.S. Treasury has replaced gold for the world reserve currency, right? Because now you can hold treasuries instead of gold. And now yuan wants to take over, all right? Be the world reserve currency. They could print up money too, and they can just issue that out there for people to use. Well, that's great. Now you have to trust China that they're going to be good, making do on all their bonds, right? Like very much everybody trusts the United States. Their bond market is tiny comparatively to the United States. They would have to issue out an insane amount of debt. They would have to just go madhouse into hardcore debt issuance in order to provide the world with a safe and liquid asset. And then the people, the world, would have to believe that it's safe and liquid, right? That's the major problem with China taking over as a world reserve currency. It doesn't have either of those positions, right? It doesn't have the world, convinced that it'll pay its debts. And it doesn't even come remotely close to providing the world with that debt, with that safe and liquid asset. And then on top of it, they're an exporting nation. How do you get the yuan out there to the rest of the world? Like, the United States is easy for them. They just buy all the world's shit, right? And then just send out the dollar, right? So if you buy the world stuff, you can easily distribute dollars out there to the rest of the world. But that's if you're an importing nation. But if you are exporting nation, how do you export your yuan when you're importing money? Okay? This is a problem for China. They need to become an importing nation and export the yuan, and they have to go into mad amounts of debt issuance in order to provide the world with a safe and liquid asset. It just isn't happening. There's nothing out there that comes close to doing that, right? And I'm not trying to say that it isn't going to happen over time. That will. I mean, it will take place. But, how long does that take? I mean, it's going to take a long time in order to provide the world with that safe and liquid asset to take over the dollar. And then if they move into gold, because there's talk about the BRICS taking on a gold currency, again, it's going to fail, because what you're going to end up finding is that the manufacturing states, the ones who can export their products, are going to import all the gold, and all the consuming nations out there are going to export their gold to those nations, and they're going to go into poverty, right? They're not going to allow it to happen. They would, I would say, okay, just imagine this, like, here the United States, and they're going to end up going into, there's a gold standard, and now their gold is going to leave. All right. Now, I'm not the smartest investor in the world out there, But when I look out there and I say, okay, well, wait a minute, guys, y'all, the BRICS nations, y'all gonna start a gold standard, huh? How much gold do you all really have? Because, you know, the United States has a lot of gold. And if you all want to do transactions, you know, you're going to need some gold. Would you like to maybe lease it from us? Right? You know, because the United States has more gold than anybody. So why would they give it up? No, it's like, you want to use gold for your currency? Fine, you can borrow it from us. Pay a fee, right, to use this gold. And that's what I would assume that the United States would do. I mean, I don't know that, like, but I mean, if I had all the gold and all of a sudden there's a gold standard out there, I'd be like, yeah, I'll lease you all my gold. Sure, why not? You guys can make payments to me for having the currency, you know? But I don't think they would just give it up. Like, I'm like, well, here goes all our gold. All right, bye-bye gold. You know, no way. What are your thoughts on commodity prices increasing? Okay, we already talked about that. You can't just force people to pay for things they done want. That's how real job is created. Make things people want. Well, it's not just make things that people want, right? It's a matter of being able to provide them with not just what they want, but at a competitive price compared to the neighbor over there, right? So it's a matter of making things that they want, but then also being competitive. Cheap beer is nice. Yeah, I haven't drank beer in a long time. All right, nobody wants to sell a home 10 years later for the same price. Lots of laughs. They won't even settle for 10% increase. Use XRP. All right. Just saying you drink Bud Light. Just say you drink Bud Light. All right. Moderate levels of alcohol. Did I miss one? I did. Where is that at? Oh, there we go. Brandon, thank you so much for the $4.99. Just a fan, love the information, mindset, and positive thinking. Well, thank you very much, man. Thank you so much for that $4.99. It was very cool of you. All right. Okay. Kind of messed up my chat thing here. Where were we at? All right. Okay, so let me get back down here to where we were at. I can't find where I was. All right, well, we'll start here. Hey, Yui, you said the dollar would dip before it takes off. We're seeing the lowest level in 3 months. It's happening like you said. When do you think it turns around? I don't know. I mean, but again, like you're gonna see the volatility in it, right? You're gonna see the rise and fall. But I believe that as long as the quantitative easing is still engaged, right, from the Federal Reserve, that we're going to see that monetary system tightening up, and that is going to, at some point, start driving the demand for dollar as people are going to be looking for it to pay off their debts, you know. And again, like come 2024, if the Treasury is getting ready for a liquidity issue, right, to make sure that the bond market stays liquid, it just leads me to believe that there's going to be other things out there having liquidity issues as well, not just the bond market. So I think like come 2024, you're going to start seeing a much different scenario. American made is quality, China's not so much. Yeah. Well, yeah, that's definitely for sure. I mean, if you're buying anything that made in America, I mean, generally you're buying something of the highest quality there is. I mean, really, America can't make anything cheap because it just wouldn't sell, right? I mean, cheap things are made in other nations who can make it incredibly cheap, but we have to make the highest quality things because that's the only thing we can really compete with, you know, is to make the best. And we kind of do, really. I mean, everything that's made in America is really good stuff. You know? All right. I'll tell you what, they don't want a nation of critical thinkers, George Carlin. That's for sure, man. They don't want that, do they, Lord? All right. No, bro. Apple Cash and titanium credit card is linked to 4.5 APY savings account. That's cool. But if people can't pay off their debt, the transaction is settled and the loan stays lent out. But if people can't pay off the debt, the transaction is settled and the loan stays lent out. No deception, real cash, it's real and it works. Bix Weir says silver and gold 1-to-1. Yeah, I could see where there would be a situation in which that could happen. I've heard that scenario come down. In fact, I've even heard where it could surpass, where you could actually trade, say, an ounce of silver for 2 ounces of gold, right? Like it could literally get that way. Due to the fact of the high demand for silver inside of the industrial need, right? The industrial use, and the fact that most gold goes to storage, like gets saved, right? So they know where a lot of the gold is. Half the silver has been depleted to industrial purpose, getting literally thrown away. So you think about it, there's like less silver out there than what people are anticipating, right? They think it comes out of the ground at a 10-to-1 ratio to gold, but 50% of it gets thrown away essentially because it goes to industrial use. That leaves like 50% of it out there to, for investment purposes. And then if you think like really, if everybody in America decided that they were going to go and get like 2 or 3 ounces of silver, that would eat up the entire global production. Just the United States decided that they were going to go and get 2 or 3 ounces of silver, not including Canada and Mexico and Russia and India and China and all the rest of the places around the world. They would want a demand for silver. But if just America went out to try and get 3 ounces of silver, it would take the entire world supply production off the market. So there is very little silver out there really to be had, especially if you think about half of it going to industrial purpose. So when it comes to building electronics, computers, solar panels, all the other stuff out there, the demand for silver is going to be huge, right, going into the future. And considering that it's a byproduct of metal mining, like gold, lead, zinc, stuff like that, it's not really a metal that is seeked after, that they mine specifically for silver. I mean, they do. There are some mines like that, but the majority of silver is coming from a byproduct of other metal mining. So even if they were to try and ramp up production, so to speak, they would have to ramp up production of all the other mining out there in order just to get the silver. So there is no real way of today there isn't. I mean, there could be going into the future, but as of today, there's no real way of just like instantly upping the available silver for production, right? Because it all comes from this byproduct of other metal mining. Yeah, I'm a huge fan of silver. Like, I am a huge fan of silver. If there is anything, like people have asked me before, it's like, how do I get started? I have nothing. I have no money, no stocks, no nothing, man. What do I do? And I said, go down to the coin store, go down to the pawn dealer and buy a silver eagle. Like, don't even really care about how much you pay for it. Like, don't pay a stupid amount for it. But like, silver right now I think is at $24-25 an ounce. So if you go down to the coin store, the pawn store, and you pay like $30 for a round, right? It might be a little bit of a high premium. Don't worry about it. You got a silver ounce in your hand. Put that silver ounce in your hand. Hold on to it. Hold on to it all day. Carry it around in your pocket. Think about the history behind silver. Think about some of the things that we talked about on these videos and stuff. Think about what the gold standard used to be. I guarantee you put that thing in your hand and you're going to want to put another one with it. You'll want to clink 2 of them together. And then pretty soon you're going to want to put 3 of them together. And then you'll start building up your portfolio. And all the rest of the stuff will start falling into place. Don't worry about like if silver is going to go to $18 an ounce or $15 an ounce or $150 an ounce. Don't think about that stuff. The only thing you should think about, how many ounces can I get? That's it. That's the only thing. Do I have 5 ounces? Do I have 10 ounces? Do I have 1,500 ounces? How many ounces do I have? And that should be the only thing, right? Don't worry about your average price in it. Don't worry about like where it's going or anything like that. Just keep stacking them, right? And just do that forever, right? And then even if you don't ever sell it or do anything with it, give it to your kids, right? Or, a relative, or leave it to somebody who's worthy of it. And really, it's an insurance policy, right? Because if anything should happen, you don't have to worry about that third-party claim. You don't have to worry about an app on your phone or a phone call or somebody not answering the door. It's all you, right? You protect it. It's your savings. It's your insurance. It's your way that you can sleep at night. It's your protection from the third-party New World Order, right? So that's my silvers. All right, they are expensive things in China too. There are expensive things in China. You're absolutely right. In fact, it's getting worse in China because of all the manufacturing that they've done over the last 2 years that has really left them in a position in which that they have a people who are enjoying luxuries, right? And in fact, go in and Google that. Chinese luxury market crashing or something like that. I don't know. You will find all kinds of articles about how the Chinese luxury market has taken a huge hit right now. And it makes a lot of sense, right? The new money comes in from manufacturing. If the manufacturing has dropped 20%, then the new money isn't coming in to those people who would dump it into luxuries. It makes so much sense. Once you start realizing, like, the increase and decrease to money to a state, you follow the Cantillon's theory and stuff, it just makes so much sense. It just starts answering so many questions that people have about, like, all kinds of stuff, like, everything that we talk about. I hate US and China too. Banks get the house, sellers keep funds that's were lent from the bank. I guess there are horrible people everywhere. Yeah, that's for sure. That's a given. All right. Said Grand Canyon full. That's why it's a national park. Yeah, I like Big's weird story about how there's like so much gold in the Grand Canyon that it would have completely crashed the entire monetary system with the amount of gold that was in it. So they had to like keep it secret. I love that story. That's a great bedtime story. All right. With 3% CPI report, will the Fed cut now? Saving accounts are paying. No, I do not believe the Fed will cut rates. I don't think they're going to cut rates until they have an average inflation rate of 2% over time, whatever that is, and they'll make the statement some point down the road, and it'll be completely arbitrary. Nobody will even know it's coming. So no, I don't think they're going to drop rates. Not anytime soon. Hey UE, at my job, the amount of fixed income traders have dropped significantly except for the repo market. Do you think that's the new liquidity? Also, US Treasuries has the most volume of any country. Yeah, the amount of fixed income traders have dropped significantly except for the repo market. What is the rest of that? Do you think that's the new liquidity? It's funny to think about that repo, because the repo market only was a standing repo facility after 2019, right? Because it was September of 2019 that we had the issue with the overnight lending rate shooting up to 10% because there just simply wasn't enough liquidity in the banks, like there wasn't enough cash. There was that huge, this is another thing, like, see, I have a video out there. It's called Things Are Changing, right? It was probably within the first year I was putting out videos, and I was reading about how the Federal Reserve wanted a standing repo facility, but they didn't have any excuse for it, right? The repo facility was a pressure relief, right? It was only supposed to be there in case of needed emergencies. And then here it was, 6, 7, 8 months later after I put that video out. Maybe it was even longer. I can't even remember when I put that video, but I do remember the title of it. It was called Things Are Changing. And like I said, they were wanting that repo facility. They were talking about it. September of 2019, there was a huge corporate tax payment that had been made. And it took a whole bunch of cash out of the big banks, and it sent it over to the Treasury General account. It's funny how we bring that one up again. See, it's always the Treasury. Okay, so this huge tax payment went to the Treasury General account, and it left the bank short of cash. And so all of a sudden, the overnight lending rate, these big banks, at the end of the day, some of them were in need of reserves, some of them, had excess reserves. That would be typical market for the Fed funds to establish the Fed funds rate was the overnight lending rate. But the overnight lending rate had shot up to 10% because there just simply wasn't enough cash. These banks were like, hey, we need cash to operate the next day. And these banks were like, hey, we ain't got none. You know, this huge tax payment just took all their cash away. And because at the same time there was a lot of government spending, the primary dealers were loaded up on a bunch of treasuries at the same time. So these big banks who are like, you know, the buyers of the treasury, like they're the primary dealers, so they go to auction, they load up on it. They were sitting heavy on government debt because the government was spending so much at the time. And this tax payment was made at the same time, right? So that left all this cash short, heavy on treasuries. And the Fed was just like, hey, no problem. We got the repo facility. Open it up, you give us treasuries, we'll give you cash. We'll just kind of do this every single day, right? And this was the non-QE QE. And now I thought about it and I'm like, oh, there's that repo facility again. Well, it's temporary, right? Because it's only going to be there while they're having this liquidity issue with the banks. And now it's a standing repo facility. It's a permanent fixture for the Federal Reserve. And so they knew that was going to happen because they talked about it. I couldn't have possibly put out that video previously if they didn't already have it in their mind that they were going to do this, right? So it's like, you know, it's like a girlfriend coming to you and saying, hey, we need to talk. Like, you know, something's up, right? You know, so that's really what was that repo facility. They knew that they were going to set that up. So when that tax payment was made, how could they not know that that was going to drain all that cash from the banks? Like, I mean, you kind of have an idea, right? I mean, you know that this tax payment's coming and you know that the banks are sitting on less cash and a lot of treasuries. You knew that was going to create an issue. I mean, you can't like the bank, like the Federal Reserve and all their economists and everybody couldn't possibly go, oh shit, we missed that one, didn't we? Like, they knew it was coming. Like, they knew it. And so I don't know where I was going with that, but anyway. Oh, they're talking about the repo facilities. Yeah, so is this the new market? I don't know. Like, I guess so. Like, that's like, you know, part of their tools. You know, it also makes me think about the bank term funding program. Like, that's a year-long program, right? So that's money injection, like kind of like a bailout for the banks. But it wasn't really, because it is a temporary, right? It's supposed to be only a year. They bought those treasuries, which are due back by the end of the year. I mean, the banks have to pay all that stuff back. So really this program, I guess it could last 2 years, right? So the bank term funding program would go for a year, right? That's how long they're going to have the program established for. So you could borrow from them for a year. And then if you borrowed from them at the very end of the program, like the very last day the program existed, then you would have another year after that to pay it back. So really this program could last 2 years, the bank term funding program can. And then in 2 years from now, who's to say what happens, like what kind of crisis that we go into, and they'd be like, oh, hey, that bank term funding program that was supposed to be temporary, that's going to be a permanent fixture too, right? So, see, the liquidity, like this is where the Fed really has most people like to the point of very confused, because they look at the tools that the Federal Reserve has available to them today and they say if this sort of scenario comes, they just simply can't deal with it. But then all of a sudden, boom, they pop up with this new tool, the bank term funding program, right? Or corporate debt lending facilities, or, you know, whatever. They have like these programs that nobody knew were in existence, right? But then all of a sudden we have this crisis situation, and then they have this program, this tool, this like lifeboat that nobody knew existed, you know. Real cash is silver, not paper or digital delusions. Yeah. They're paying because of Apple. They're paying because of Apple. Huh? Don't think so, KK. They want inflation expectation well anchored at a high place. Yes, absolutely, Stephen, they do. They want it anchored at a very high place. And again, like, you know, there's a lot of reasonings for that. Like, really, if you have a low inflation expectation, it really diminishes the amount of stimulus, the amount of the effects of monetary stimulus. And if you have a high inflation expectation, that will enhance the monetary stimulus at the time. So it's really critical for them to get that narrative out there, that inflation expectation, they need to push it out there. to get it up, to make sure that the people have this inflation expectation that is very high as they give them that stimulus, right? And the main reason for that is so that you would go out there and spend it and not save it, right? Because if you believe that inflation is coming, you would be more eager to spend your money now before the prices go up. Now, it also does a couple of other things to it as well. Like when you lower or raise the inflation expectations, you can change the real interest rates. And this is something that I think a lot of people kind of missed back during the Trump administration, back when he was screaming at the Federal Reserve, saying that he wanted to fire Jerome Powell, that the Fed should take interest rates into negative territory and they should be printing money because there's no inflation. Remember Trump saying this? I mean, if you didn't, just go and just Google it. I mean, there's plenty of videos of him talking about it, right? So, he was screaming it. There's no inflation. The Fed should be printing money. They should be taking interest rates into negative territory. I'm going to fire Jerome Powell if he doesn't do that. Well, what he was doing was he was lowering the inflation expectations. And it totally worked, right? Because what that does is when you lower the inflation expectation, you can raise the real interest rates. Now, here's the easiest way to understand that. If you're an investor who is anticipating that you're going to get a 2% return, right? But your inflation expectation is 1%, your real interest rate that you're going to get is 1%. What the investor is anticipating they're going to get after inflation. So if you can lower the inflation expectation, you'll raise the real interest rate to 2%. You see what's happened there? So lowering the inflation expectation, you can raise the real interest rates. And now that's really what Trump was doing back when he was screaming at Jerome Powell to fire up the printing presses and take interest rates into negatory because there's no inflation. He was lowering the inflation expectation and raising the real interest rates. So the exact opposite happens with the stimulus, right? You start raising the inflation expectation, right? Instead of lowering the inflation expectation, what you will end up doing is you will lower the real interest rates. Okay? Now think about it. If it works the opposite for lowering the inflation expectation and raising the real interest rates, if you raise the expectation, you will lower the interest rates. But the other thing that it will do is if you have a loan that you can get at 3% today, so think about all the mortgages that people were taking out when the inflation expectation was running hot, but the Fed was keeping the mortgage rates low by buying up the mortgage-backed securities. By keeping those interest rates low, you can spend money today at 3%, right? And save it for your purchasing power at 7% in the future. So you spend it today at 3% as opposed to losing 7% to inflation coming into the future. Now, I didn't look at it that way. That's what most people would look at when they think of inflation running extra hot for an extended period of time, like forever. Then that would be the feeling that they would get, that they can spend their money right now at 3%, right? Pay a 3% interest as opposed to losing 7% into the future. So again, if you can raise the inflation expectation at the same time you're putting out stimulus, you can push the effects of stimulus out there by raising the interest rates or the inflation expectation. Sorry. Did I say all that right? Man, that was kind of confusing. Sorry, guys. I want to see a worldwide broadcast of Geraldo Rivera opening the vault at Fort Knox. Yeah. I'd rather see Geraldo in a death match in Thunderdome. Yeah. Be very paranoid of fakes. I used to work at a coin dealer buyer that did not understand how sophisticated fakes are. Yeah, I can believe that, especially out of gold. But like silver, I don't know. I mean, the amount of time, effort, and energy it would go into producing a silver coin that would be that size and that exact weight and be profitable, I mean, I guess it could be there, especially if silver rarely ran up like $50-$60 an ounce. I could really see it happening in gold, but not so much in silver. I know there's fake silver coins out there, but really if you kind of recognize it pretty good, you can measure it, for weight and size, really it's going to be pretty difficult to duplicate that exact thing, right? Not saying it can't happen, but the profitability inside of faking it as opposed to faking gold, I just find it less in silver. Silver sounds fine, beautiful resonance. Yeah. No, I don't want carry them around. I wouldn't be able to go anywhere. Only silver and gold have that ring and weight of the real dollar. Are bonds zigzag? Like you roll spliffs with bonds? If you are too broke for silver, U.S. nickels are a great alternative. Yeah, I totally agree. Only currency made of real valuable metal. I have $2,000 in nickels in my apartment, 75% copper, 25% nickel. Well, that's right on. Copper pennies. I'm more into copper pennies, pre-81 pennies. I sift through the till at work, I pull them all out, I swap them out for zincs, and I take them home. And yeah, I even today, like, I mean, I pulled out, probably 15, 20 of the copper pennies. And nickel and copper are also monetary metals and industrial. Yeah. And that's what I love about, like, nickels and pennies. Like, even if you were to, like I've said this before, if you were to put all your wealth, everything that you had, every dime of every possible corner, you put it all into nickels, right? Literally the 5-cent nickel, US coin. You have something that could not possibly fail, right? Not only does it have more weight or more value in metal than it does in face value, even if I was crazy and it didn't make any sense and the price of metal fell out or something like that, you can spend it at face value. It has zero loss to it. There is no way that you could lose by being in nickels or copper pennies, right? Pre-81 pennies. Because even if the dollar fails, you got the nickel metal value, right? And if the dollar doesn't fail, then you spend it at face value. No way you can lose. And that's why gold and silver can never be money today. All right. Can you smoke a fat bond? Love that story about the gold. Which one? Are they done raising? No, I think they'll raise it just a little bit more. And not because I think that they believe that the economy needs it as much as they believe, or as they want to make sure that the markets believe that they are not done raising rates, right? Because the markets are already going to perceive, with the inflation coming down, the markets are going to perceive, okay, the Fed's done, right? That they can start moving in the opposite direction, and they're going to start positioning themselves to do that. If the Fed does not put out the credible threat, hey, we are going to raise rates, and then actually do it, then the market's going to believe that they're going to be dropping rates going into the future, that it's going to follow inflation. And so that's not the case, right? So the Fed is going to keep that credible threat, keep that narrative going. And even if they have to do it, like, even if they don't want to do it, they might do it just to make sure they can maintain that credible threat. And again, like, since it works off of a lag anyway, like, really the economy is experiencing somewhere between 3 and 4% right now, and not 5 and a quarter. And that's really what impacted the economy, right? That's what's bringing inflation down, is being above the neutral interest rate, which is probably, and nobody knows the neutral interest rate, right? But again, that's probably somewhere between 2.5% to 3%. And so now that the Fed funds rate and the impact from the Fed funds rate being at 3 to 3.5%, it's slowing the economy down. It's creating the inflation to come down. We don't need it at 5 and a quarter, but the Fed wants their ammo back. So they're going to keep it at 5 and a quarter, and they're going to make us feel a bunch of pain for it, because they need that ammunition, so that when the next time we go into a recession, they can drop those interest rates 5% and not have to worry so much about the fiscal stimulus coming out of the government. Wow, did I say that all fast? Did all of that make sense? I don't know. Sometimes I just feel like I just talk too fast. All right. Let's see. Unless the banking system crashes. Okay. See, I can look at a $100 bill and pretty confident that I know if it's a counterfeit. Yeah, it's funny. I had the guy come in, I don't know, about 4 or 5 months ago, and he had a really old $100 bill, right? It was from, like, I don't know, the 80s or something like that. And one of the other guys who I work with, he's a coin collector too. He's not really big into the economy like I am, but he collects coins. So he collects silver coins, and, he searches through and pulls the wheat pennies out and stuff like that. And so he knows currency. Like, I mean, he's seen it. Like, he's collected some stuff before. And this guy lays this $100 bill down, and it's dirty, and it's all wrinkled up, and it's stained. Like, it's been, looked like it had, like, water stains or something on it. And he comes up with this BS story about how it was buried under his porch or something. He buried it when he was a kid, And this guy, he's like my age, right? Maybe a little bit older than me. And I'm looking at it, I'm like, dude, that is not $100 bill. I mean, it looks like $100 bill, like exactly like 100, all the markings, everything on it, right? And Dan picks it up. He's like, dude, it's not even the right size, right? It's like the bill itself wasn't the right size. It was like slightly smaller, right? And he was like, oh no, it's just an old bill. You just don't know it because you're not used to seeing them because, of how old, you're just not old enough. And Dan's like, how young do you think I am, man? I mean, Dan's older than me. And he's like, how young do you think I am, man? This is not even the right size. I'm not taking this bill, right? He knew right away. And so the guy pulled out another $100 bill that was a real bill, and we took it, right? And he bought his stuff and he left. And so I'm assuming that this guy was just traveling around trying to drop these fake bills. And we called him in, but by that time he had already skipped town. Like, the cops got better things to do than to chase some dude around. So, but it happens. Like, this guy tried coming in with a fake $100 bill that wasn't even the right size, and then tried to convince us that it was because of our age that we didn't recognize it. It's like, it was funny. All right. Okay, guys, I'm gonna give it like another 10 minutes here, and then I'm gonna have to head out. But it has been so awesome. This has been a great live stream. Got 231 of you, 175 likes. $54.99 in super chats. You're always so generous for that. Thank you so much. All right. Keep crushing, brother. You should hit up Owen again for a talk. I know, you're right about that. There's a bunch of people that I should be doing interviews with again. I was planning on doing that when I got back from the Rebel Capitalist, and I just kind of had a couple of weekends to kind of get occupied, and so anyway, I'm making up excuses. I shouldn't have excuses. I'll get a hold of Owen and we'll get him back on the show. How about that? Let's see here. Your perspective is very relatable on more than just economics. Helps a lot at work during the day. Yeah, and that's something that I think once you start getting the feel for economics, once you start getting an understanding of like some of the basic principles and how the Fed funds works, and how interest rates and all that are established. Once you start getting an understanding for a lot of this stuff, you start looking at your day job, or maybe some of the experiences you have just going throughout the day, and you start looking at like what's happening out there. Like, I go to the restaurant. I don't go to a restaurant that much, but when I do go to the restaurant, I look to see like what age are the people eating. Do they have kids with them? Do they look like they're visiting, like they're tourists, or do they look local? Working class or not. A lot of times I will see people, like if I happen to be near a coffee stand, right? Like, whatever, somebody's getting coffee. What I like to do is see who's buying coffee, because you find, and somebody mentioned this the other day to me, and it's so true. They say when you go to the coffee stand, you'll see two people, rich and poor, right? The rich drink coffee and the poor, but the people in between don't really buy that much coffee, right? And I like looking at their shoes, right? Where you'll see somebody buy like an $8 cup of coffee, and they'll be wearing shoes that have holes in them, right? and this is like, a lot of like what, gives you a better understanding of what's going on in economics, because this is definitely a mentality of where people are at, especially when you look at like who's buying what where. Work in a retail lumber yard, I mean, working the retail lumber yard and having the insight I did to lumber at the time that I did, that's what made me famous on YouTube, right? I mean, it was being able to call out that lumber market as accurately as I did, and I would not have been able to do that if I was not in the working position that I was. Like, literally working the till gave me better insight to the lumber industry than anybody else. Like, period. Anybody else. Like, nobody had it as down as I did, right? And it wasn't because of the information that I was getting from the top, like from the mills and all that other stuff. A lot of that was coming directly from the experiences that I was having from the people at the till, right? And putting that in combination with my understanding of macroeconomics, and then my, the location where I'm physically at in the Pacific Northwest. I know people who work at the mills. I knew loggers. I knew truck drivers. I knew, people who work in the distribution network, as far as like, the vendors, the wholesalers, the retail. Like, I knew there was no part of that market that I did not have access to for information. So there was no way I could miss it, right? I mean, there's ways you can miss it, but there was no way that I was like not getting all the info, or at least the bulk of it, the majority of it, enough that I could come out and just really talk that lumber game up. And when I was calling out like lumber going back down to its normal prices when it was peaking out, was an incredibly bold move for me to do, right? I mean, it was running up to $1,500 an ounce, and I made the statement, what you all gonna say about inflation when lumber goes back down to its normal price? And here it is. And nobody can explain it except for me, because I was explaining why it was going to go back down to normal. And I mean, there's plenty of other people who can explain. I shouldn't say that it wasn't, but everybody else was like, had all these other excuses for it. No, I mean, I'll tell you why, and I can still tell you why. And the story that I told about lumber was second to none, right? I mean, I would go toe to toe with any economist when it came to the lumber industry. Yeah. Any one of them. I don't care who they were. All right, 1 out of every 3 $100 bills in circulation is counterfeit. 100% covered in cocaine like the White House. $100 USD piece of worthless paper holds as much value as $1 US, I believe. Toilet paper holds more value. Yeah. I don't know. I'm going to hold on to my dollars for another 6, 7, 8 months, and then I'm going to buy a bunch of... hopefully I'm going to get into stocks and silver or something. I don't know. We'll find out what's down at the time. Okay. That as well... Many South American countries have printed counterfeit U.S. currencies for decades. The Secret Service first job was killing counterfeiters, not taking bullets. No arrests, they straight killed you. That's what they did before presidential. Gosh, I gotta learn to speak. Okay. Stop counterfeiting in the silent war. Take care, Simon. Gotta cook up dinner. See you later, Lord Humongous. Thanks for being here, man. Bye, everyone. Stay free if you can. Absolutely, man. Stay free yourself, brother. What's new at City Lumber? Okay. I think they still today, but do not speak of it. Counterfeiting was for sure capital crime they killed you for. Matt, okay, you should run your stocks through a dividend investor calculator to see what your account balance will be in 10 years with the dividend reinvestment plan. Oh, I get it, man. Okay. I'm not much of an investor. I'm still really learning how to do this, Like, that's the whole reason why I even started buying some of the stuff that I did. It was just to kind of, because you got to play the game a little bit if you want to understand it, right? And I don't know, like, what do I know about picking out companies or anything? I mean, there's a lot to know about when it comes to investing. Man, family kind of getting crazy out there. But I'll do that. I will do that tonight. Hi, UE. Any thoughts on tech stocks? I don't know, man. Like, I'm not a techie type of person, but when I think about like what happened during the pandemic, there was a huge push into corporate debt. And what ended up happening is that when this big push into corporate debt starts to take place, investors don't know what company is going to do it, right? Like, you got 5 companies, like 5 tech companies that all have maybe similar ideas of products or something that they're going to do. Not all 5 of them are going to make it. 3 of them might make it. One of them is going to kill it. One of them is going to do really, really good. One of them does okay. The other ones might just break even, whatever. The other 2 are going to fail, right? But the investors don't know who is going to do that, which one of them is going to be. So you invest in all 5, right? You invest in all 5 of these things. All of them take the money. They all expand their operations. All start to show like, they're doing things, right? But 2 of them are going to fail because they're zombies. How do you pick out those ones? Like, how do you know? Like, when people ask me about the tech companies, like, you can get into tech, how do you know, right? Like, this kind of thing happens, and, I think, one particular company seems to be very popular out there. How do you know if they're going to be the one who does it or if they're the failing one? So this is where really breaking down, like, all the numbers of a company to understand what those numbers mean and what they mean for the future, and then I guess a lot of, like, intuition. So. That's evidence that Trump doesn't genuinely care about inflation problem. Well, I don't think it was that Trump generally doesn't care about it. I just think that that was in conjunction. I think him and the Fed were in cahoots. They were like, "Hey man, how do we get the inflation expectation to go down?" Right? Like the Fed was like, "How do we get that?" And Trump's like, "No problem. There's no inflation. The Fed should be printing money, right?" And then boom, their inflation expectation starts to fall, right? It was like, "No problem, Jerome. I got your back." Right? I mean, it was no problem. I bought fakes from China for educational purposes. Weight is right on. Dimensions are right. Only difference is it smells like brass after sitting out. Really? That was interesting. I would like to have a fake one myself, just to have it. Just say there's a fake. All right. They are plating tungsten. Yeah, I've seen that. See, that's where I would think like gold. Like if you counterfeit a gold coin with tungsten, and the effort that it would take to do that, because you can do a scratch test to see if it's real gold or whatever. But to fake it with that tungsten in the middle, that would be quite costly. But it would be worth it to get the gold, to get an ounce of gold, and get the money for that. But for silver, I don't know if it would be worth it as much, right? I'm not saying it doesn't happen because obviously it must. Hit the like button, guys. Yeah, it was an asset stealing operation from the start. Yeah, for sure. So true. All right. Do you think physical security is necessary as people make their way into riches? Think I think physical security is absolutely important. Both physical security for yourself, for your possessions, for your family, for your house, all that stuff. I find physical security absolutely important. Do not rely on a third party unless, I mean, don't rely 100% on a third party is what I should say. Lots of those people with holes in their shoes have student loans they have to start paying in October. Economy may be headed south. Well, okay, well then stop buying coffees and make your student loan payment. Yeah, that's what I had to do. I mean, nobody came and said, "Hey, man, you got $21,000 in debt because of your stupidity that you had in your past." Not saying taking out student loan is stupid. I'm just saying my personal stupidity, right? Nobody came and said, "Hey, man, we're gonna forgive you." They were like, "No, go pay your fucking dues." And I'm sorry, I don't mean to cuss, but go pay them. All right, go figure it out. Go work hard. Go stop drinking coffee. Have you ever followed or talked about Milton Friedman? Um, no, right? I mean, other than following a little bit of what other people have said and some of the things that I've read and things like that, but no, I haven't. I see like I watched a video of Milton Friedman talking about the printing press, and he's like, going on about how all this money is creating all the inflation and stuff. And that's great. Like, I mean, there's a wonderful theories behind all this stuff. And I'm not trying to knock it. My theories are the ones that I've come up on my own, right? So, like, I don't, I'm not disagreeing with anything that Peter Schiff says, right? Peter Schiff was probably the number one most influential economist when I was learning stuff. I would constantly be listening to Peter Schiff. Okay? But as time went on, I figured something out, right? It's because I'm a salesman, I recognize the tactics, right? And that's what Peter Schiff is. He's a salesman. And that's what every interview, every video, everything, every speak that he talks about, it's all in a push to get you to believe, right? Puts that thought, the emotion, belief, evidence, now you're convinced, right? And the same thing, that's what he's doing. So when you listen to it enough, pretty soon you're going to be convinced, I have to buy gold. I have to dump every dime I have into gold, right? Because that's what he's doing. He's pitching it, right? He's pitching that gold out there. With the information that he talks about, as far as his macroeconomic views, all the other stuff, absolute grade A stuff, right? Absolute grade A stuff. But again, like, I take in the information, I take the thought, and I said, hey, that's an interesting thought. I'll hold on to that one, and I'll take that one as well. But my beliefs are the ones that I'm coming up with. They're my thoughts, my beliefs, my understandings, what I'm convinced about. So when I hear, like, that's a direct, conflict with this other person's argument or something like that, I'm sure it is, right? I mean, but who's to say who's right and wrong, right? Okay, guys, I'm going to give it one more question here, and then I have got to go because it is getting late. Okay. Thomas Crown, thank you so much for the $5. If everyone is front running the Fed pivot, does the Fed even have to pivot? Great question. So, well, what is the Fed looking for? Are they looking for the markets to be supported, or are they looking for the consuming to come down? Right? Which one is it? I mean, do they really want the consuming to come down? They really want the price inflation to come down, or do they want to support the markets? Right? Like, because a lot of people say that they're there to support the markets. I don't believe that, right? And now a lot of people will shake their heads and roll their eyes at that one. Whatever. I don't think they're there to support the markets. I don't think they really care about. I mean, they do care. Don't get me wrong. What they probably are not concerned about is the markets turning down. I do believe that they would be concerned about them crashing, right? Like an actual crash. But downturning, I don't believe that they would be terribly concerned about that. If they were to turn down, all the media would have to do is put out the narrative, right? Or the Fed speaks, right? So these, the Fed presidents and stuff come out and do press interviews, and they just have to say it, right? Put out the, okay, I'm about ready to lose my power here, guys. But they'll just come out and say, hey, we may not need to hike, we may be done with our hikes or whatever. And if they put out that narrative enough, the markets will start acting in that way. So if the markets start to tumble, they could put out that narrative, hey, we may not do anything, and then the markets will feel support over that, right? And then they'll start to behave in a way that actually is gaining that support. So in that way, with that credible threat, I think, yes, they can do things without actually, they can participate in the stimulating of the markets without actually having to do anything. Just the forward guidance alone, or the jawboning, or the credible threats alone would be enough to move the markets. But it wouldn't be everlasting. It would only be temporary until the markets figured it out, and then they started moving back into what they think the Fed is really going to do. So, yeah, I think that the Fed will have to pivot at some point, but if the markets believe that they are pivoting, then they'll react in such a way as if they had already pivoted. Yeah. All right. See you, dude. Thanks for the stream. Well, thank you, everybody, for being here. You all have a great night. It has been wonderful hanging out here with you. Got 221, 180 likes, got $60 in super chats because you guys are just so generous and awesome to support the Uneducated Economist. All right. Why are the markets running back up right now? Is it FOMO? Okay. Last one, and then I'm going to go. The last video I did, right, was talking about the neutral interest rate and the negative interest, or the neutral interest rate and the impacts of having a lag time to that. So let me show you one more time on my drawing that I did the other day. I think the video is probably going to be better if you just go and watch my last video that I did, but that's where I got this kind of funny looking drawing from. But this is ultimately what happened here, okay? So if you can imagine, right, this little line right here that's drawn straight across, right? It's a ballpoint pen. That's the neutral rate. Just imagine that. It's an imaginary line. Nobody knows exactly what neutral is, right? But if we can imagine it being at somewhere around 1.5%. When the Federal Reserve dropped interest rates down to zero, what they essentially did and maintained zero for a significant amount of time is they took that neutral interest rate, which is the interest rate that's neither accommodating nor restricting the economy, and it started to bring that neutral interest rate down. All right. Now, this is kind of important to understand that there is a lag, right, from the time that the Fed moves these interest rates to the time that it actually impacts the economy. So once they had hit zero and it was time to raise interest rates, the neutral interest rate had come down quite a bit, right? But it wasn't like the Federal Reserve had dropped interest rates from like the 2.5 or whatever down to zero. Really, they only got a little ways below the 1.5. And then as the neutral interest rate was coming down, really the distance between the neutral interest rate, which is again neither accommodating nor stimulating, or neither accommodating nor restricting the economy, started to come down. Really, they weren't that far away from it, right? So it wasn't like it was stimulating the economy that much. Then it came time to restrict the economy, right? So it shot interest rates up to, we're just going to say up here to 3% over the course of like 6 months, right? That started to drag the neutral interest rate up. The longer that interest rate, the Fed funds rate stays elevated, it'll start increasing the neutral interest rate, which is again the interest rate that's neither accommodating nor restricting the economy. So what ended up happening is they shot it up to 3%. That started dragging the neutral interest rate up. But that 3% is not what the economy is feeling, right? The economy is feeling what was taking place 6 months to a year ago. So really we have to take that 3% Fed funds rate and move it over 6 months to a year. So we're just going to assume 6 months to a year has passed from the time that it hit that 3%, which is about where we're at now, right? Somewhere around 3 to 4%. The neutral interest rate is now rising because of the elevation of the interest rate, which puts us at somewhere around 3%, and the elevated neutral interest rate really only has this much restriction taking place. Not the 5.25% that a lot of people are believing is impacting the economy, but it's actually 3%, and because the neutral interest rate has risen, it's really only restricting the economy just a small amount. Nobody knows exactly what that small amount is because we don't know what the neutral rate is, and we don't know exactly what the lag time is from the time that the Fed had raised rates. But it's my opinion that that is one of the reasons why the markets are not tanking as bad, is because it's not nearly as restrictive as people think it is. Uneducated economist, you let me know.